What a difference a day makes. Are you ready to buy stocks today? Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub with your midday market update for Tuesday, the 10th of April. For one brief shining moment, Apple reached a valuation of $600 billion. Can you believe that? We'll be looking at Apple stock, which is right on the screen right now. We'll be analyzing that stock. And also the Fibonacci retracement on the S&P 500. The market's gone just a bit beyond that, but we'll be looking at also the S&P 500. And also three stocks on the move: SUPERVALU, Hewlett-Packard, and MMI. I'll let you figure that out later. But let's go to Apple right now. But first, let me just say one quick note. Have you ever thought about personal one-on-one Market Club coaching? Now more than ever. If you did our questionnaire, you'll see that how powerful these trade triangles are, how they get you out of markets before they crash, like the post we put in our blog today. So anyway, it's a free call and it's a free consultation. You've got nothing to lose and everything to gain. So I suggest and recommend that you give us a call at 877-219-1482. Look forward to hearing from you. So let's go to the charts and let's go take a look at Apple. As you can see, Apple is in a very strong trend. No denying that. We actually today we hit a high of 644. I think to make the valuation was 643 and change. We certainly did that for a brief shining moment, but the market is on the defensive a little bit today. And this is going to be a very, very key week in my mind for Apple because if you look at the momentum actually, the market just made new high and we're actually going down, so that's not a good sign. But picking a top in any market is not a smart thing to do, period. That's the one thing you have to remember as a trader. It's not your best interest to try to pick a top in a market. So I would rather wait for this market to make some sort of turn if one wanted to A, get out, or B, get short. Generally speaking, probably exit a position. Our weekly trade triangles are going to do that very well for you, so I would pay close attention to our weekly trade triangles, which are long, by the way, from 393, as is our monthly from 355. So mega profits in this incredible stock that's really making a lot of money, and it's a real company. This is not the Instagram where it's made no money and it's just being valued at $1 billion. It's a different company. It actually makes products, it sells products, makes a profit. So we'll see how things work out with that. But generally speaking, the market hasn't turned around, but this week I would watch it very carefully and see if we have either we close lower for the week, and we closed last week, if you remember, it was a Thursday. We closed on the 4th. Let me just get this right. Hold on. We closed on the 5th, let me just get the right, at 633, so we're actually about unchanged for the week. Now, this is going to be a very key level for this market. If we close lower for the week, it would probably be one of the first times we've seen Apple close lower for the week. So here we go. And I mean lower for the week from the previous week. This is really kind of just not great, but let's just see how we do. But obviously, we've got a lot of room to spare on this market. I would say the key coming in here is going to be the 589 level, and that's a level you'd really want to watch in Apple next week. And I'm just going to write that on the screen so everyone's aware of it. So the key level is 589. That's the key level to watch, I think, coming this next week, and that's right around here. If we go below that level, I think we probably, for the most part, topped out for a while. We may have to regroup to go higher. So let's go to our next market. The next market we're going to look at is the S&P 500, and this is really being under pressure today. We've seen a lot of people all talking about, oh, Europe, 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 and I'm going to go to a daily chart because this is a weekly. But you can see a couple of things here. One, you can see yesterday we had a signal at 1386 to exit this market because of our intermediate term trade triangle right here. Said to get out, and of course it saved us money today. But we're at the lower end of the Donchian trading channel, and the key there is we're actually, I think, probably at some sort of form of support. We are very, very heavily oversold. You can see here, very similar to where we were right back at this period in time. So I think that's something to really pay attention to. So we're back to the levels like here, which was that low, and here. So we may be at a low period coming up in this market. So let's see how that plays out. But generally speaking, similar pattern to when we're back in the late November period, when we basically were going down, we sort of hit the lower end of the Donchian trade channel, had a move up. What we need to do is maybe have a couple of, let me clear the screen, a couple of quieter days where this market's going to sort of settle down and we can see where things lie. But right now, I think we need a couple of slower days, maybe Wednesday tomorrow, and maybe Thursday, and then maybe Friday start to move back up. But generally speaking, at the lower end of the trading channel, and that usually is very similar to what we talked about here. So we may have a couple of days out, but I think we'll see the market come back. Certainly this level right here is very, very key support, and that's the 1340 area. 1340 area. Very key support for this market. So let's just write that on the screen. So what we consider to be major support on the S&P 500 is 1340. So a little ways away from where we are right now, but nonetheless, this market's very much on the defensive. We've had 1, 2, 3, 4, 5 days in a row, 5 days down, and that's not necessarily a good thing. So let's see how this plays out. We are oversold. We have a major long-term indicator, our monthly trade triangle, which is right here, is positive, and that means the longer-term trend is up. Intermediate-term trend down, and short-term down. So that's how things stand right now with our trade triangle. So let's clear the screen and go to our next market. And the next market we'll be looking at, I'm going to skip very quickly through the Dow. You can see pretty much that's right outside the trade triangle. The support for the Dow is coming in at 12,734, and we're right 12,760, so another 20, 30 points. It's at good support. I expect we'll see this market bounce. If it doesn't bounce, then we're going to see a lot more pressure coming into the market. So let's see how that plays out. Also on the NASDAQ, we're getting towards the lower end of the trading range there. Again, we had the signal yesterday at 3,044. That's 44 points ago to exit intermediate-term traders. Long-term traders, excuse me, long-term traders should remain long this market, and because the trend continues to be up according to our trade triangle. So let's go to our next market. That's going to be silver. And the silver, I'll move this up here. It's a minus 60, which is a trading range. And you can see just how non-committal this market is right now. It's sort of just going along, boom, 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 boom. Very kind of no real trend. But the major trend, the long-term trend right here, is still up. But the intermediate-term trend and the daily trends are still down. So it gives you that trading range. And that means there's really not a lot to do until we get a strong trend developed in this market. So let's just clear the screen, go to our next market. The next market is going to be gold. And gold is pretty much in the same picture, except it's a little more negative, if that makes sense. We have all of our trade triangles red, except for our daily, which is the short term. And that's sort of indicating a kind of a 50, well, we've got a 55 range, basically is a trading range. So there you have it. We've actually got down to, if you remember, we were looking for a Fibonacci retracement back down to the 1620 level. We just put that back on. You can see we actually got that. We got traded just below that level. So we're back up to 1655. I think this market's trying to do something that is pretty interesting. And I think what it's trying to do is to regroup and build some sort of a base to move higher, perhaps later on. And maybe you'll have a going higher this way and then starting to go higher. But very, very much in this mode. But this level, obviously the 1800 level, very, very key resistance. And it's going to take some time to get over that. But nonetheless, we've got some mountains to climb, first of all, which is the 1680 level and then the 1700 level. There are two areas we have to move over before we go anywhere in this market. But right now, it would appear that the Fibonacci downside retracement, which is right here, has been satisfied. And we'll see this market sort of move sideways. So let's watch the triangles and see how they work. But you can see right now you've got the triangles are still negative in terms of the monthly negative, intermediate negative, and only the positive is the daily, which is not as powerful as the monthly or the weekly, of course. So let's clear the screen and go to our next market. Now this is interesting. This is copper, and copper's really taken a hit today. If you remember, we were looking at this market The support at the 370 level, we've clearly broken through that level today. And unless it closes over that level, which it could possibly do later on, it's certainly put a crimp in the upward story for this market, and this being a super energy field. The 3.75 was where we're long from on the monthly. That remains positive, but the weekly and the daily are short, are negative, I should say, on this market. And I think we need to give it perhaps some more time. So let's go to our next market, and that's going to be crude oil. This is an interesting market right now. You've had the pullback in the Fibonacci. We talked about this before. The Fibonacci retracement. We go from the highs again, just pull it down to here, and you can see we pretty much hit the levels that we're looking at. And again, this is a situation where I think the market really needs to, if it's going to go higher based on our monthly trade triangles, which is the longer term trend, it needs to regroup right around these levels, and right around the 101, 100.50. I would not really want to see it go below 100. I think that would change the pattern, but nonetheless, this market has been drifting down for the past 7 weeks, and it really needs to regroup if it's going to go higher. So I think that's something to really pay close attention to. And I would say the best way to look at this market is to look at our daily trade triangle right here. If we see that go over, let's say the 103 level, right around these levels here, just about there, 103.50, 103, I think you've made probably a turn, and we'll get a test of the 106, 107 levels. So let's see how that plays out. So let's clear the screen, go to our next market. And the next market we're looking at is going to be the, well, it's the USO. It's pretty much the same pattern there. And we'll skip that and go to the euro. Now, the euro, this is a very interesting chart pattern right now, in my opinion. And this is what I'm looking at. It would appear to me, and I'll just draw this to you with my illustrator. This is what it looks like to me. It seems like you've just come off the lows. You've got this kind of really kind of almost a head and shoulders. So this would be the left shoulder. This would be the head. And these are usually very, very, very powerful indicators. Now, here's the neckline. This is the neckline right at 130. I think this is going to be a definite key level. If we break through this level here on the downside, then I think we're looking at a move from the 135 down to the 125, which is 125, which is down at this level right here. Now, this day we're seeing right here, it was beginning to look like a dark cloud cover. It depends on where it closes, of course, today. But if it does close, let's say, down towards these levels, and we get this sort of, it's 2/3 of the previous bar, and then tomorrow we close lower like this, then I think this market's in serious trouble. I think we'll see this 125 level hit, which means it'll be not necessarily good for European stocks, but I think that's the way to look at it. But this looks to me like it's a big distribution field, and we're going to push this market one more time to the downside and test the lows that we're seeing right here. So let's clear the screen and go to our next market. And the next market we're looking at is going to be the Reuters CRB index, which again is under pressure. Now let's scope a little more, show you a little bit more of this market, because it really, we're down now to, we can probably draw this in. Let me draw some things in here that I think potential. And this is a potentially a little bit of a distribution period. We actually thought this was a bigger head and shoulders base, which a double bottom rather, one here and there's one back here. You can check that out. And this is a pivot point. It didn't get through there. It tended to be resistance, and now we're sort of going down from the 315, 325. So let's say that's 10 around about 305 level, which we actually got, and now we just pushed through today with a lot of pressure on a lot of markets, plus gold and also oil as well. So let's clear the screen. But the trend with our trade triangles are all at this point in time negative, 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 minus 100. It's a strong downtrend, and I think that's the thing to look at right now. And you go with the flow. You don't fight the markets, you go with the flow. Let's clear the screen and go to our next market. And the next market we're looking at is going to look at some stocks. And the first stock we're looking at is SUPERVALU. And the first thing I want to look at is just our trade triangles. Now, what do our trade triangles tell us? Immediately, the trend is down from the monthly and the weekly. down from 844 and 664. The market's at 585 now. We had a big move up today. This is a short covering rally, in my opinion. I don't think we'll see the market go much higher than it is right now. It's probably a selling opportunity with the highs being today at 631. So I think that's probably a selling opportunity with the stop over the highs. But generally speaking, it would appear as though this market is still in a downtrend. 75 is an emerging downtrend. So not much excitement on that front. Next market is HP, Hewlett-Packard. HPQ is the symbol. And you can see that market's actually popped up today. It's up about 1.5%. Given the overall market, it's a pretty good thing to see any stock up today. But generally speaking, you can see this market does have support, or is appearing to have support, I should say, right around the 23 level. You can see a place here and a place here. So you've got that sort of support zone around 23. And you certainly have resistance around the 24 level. So I think this is kind of like where we're trapped in a $1 range. And you can see we've been going sideways for a couple of weeks now, and without any really clear direction. And that's what HP needs. It needs a clear direction and a plan if it's going to combat and be in the computer business. So let's clear the screen off and go to our next market. And we're covering a lot of stuff today, but I really want to get these, show you what we're doing and share with you some of the ideas we're looking at. This is Motorola, and we get a closer look at this. And Motorola is basically a mixed picture. We have a 60, minus 60 is a trading range. The monthly is longer term 27, and we're 39 on the weekly. So we really want this to be a market that wants to go higher. Now, if we just put a line chart on here and we go in from, let's say, a Fibonacci level from the highs, let's say here, and go down to these levels here, we sort of got very close to, see how the Fibonacci works? I I just looked at the stock for the first time today, and here's the pullback. You're in a bull trend, so you're actually buying a pullback in what is considered to be a bull trend. I'm sure if we go down, we will probably see that we're a little bit, we were a little bit oversold, and I think that's the key thing to look at. So again, do you see where the, in fact, let me just do this really quickly. Let me just take the Donchian trade channel off here, and there you can see a much clearer picture of where this market is. You can see this is the low, 38.80. This is where the Fibonacci level came in, and this is where we took it from this low to the high and measured the retracement, which is going from, it's a 23% retracement of 38, 50, and 61.8. This is the level you want to be looking at to buy stocks on a pullback. It's a 50 to 61.8% level. And what I suggest doing is maybe buying maybe half your position here, so 50% here, and another 50% here, and then put a close stop on it. Money management is very key in these types of markets we're seeing today. So let's just clear the screen one more time, and let's just go to our last message of the day, and that is personal one-on-one Market Club coaching. Is it right for you? So, hey, this is Adam Hewison. You know what to do. You've seen it before. If you haven't called us yet, give us a call at 877-219-1482 for a free consultation. The call is free. You have nothing to lose. I'll be back tomorrow. We'll have some exciting markets, and we'll see how these markets close today. A very, very key day for stocks. So I'll see you tomorrow.